We begin with a smackdown on a China crackdown. Chip stocks getting rocked as the U.S. takes new aim at Chinese tech giant Huawei. Elon Moy is live for us in Washington with more on this major developing story. Elon.
Well, Melissa, the White House put Huawei on a blacklist a year ago, but the administration is still worried that it is relying too heavily on U.S. technology and on U.S. software. So today, the White House is tightening the restrictions around its supply chain. Companies will now be banned from providing Huawei with chips made using American parts or American design unless they receive special permission from the Commerce Department. Now, of course, this also applies not just to Huawei, but also to its affiliate, including its in-house chip maker, HiSilicon. And it comes at a time that the White House is trying to blame China for spreading the coronavirus. Now, just today, this afternoon, President Trump told reporters that he is not thrilled with the possibility that China won't fulfill its obligations under the Phase 1 trade deal. And on this move against Huawei, the president does have the backing of the GOP's China hawks. On Twitter, Senator Tom Cotton said the U.S. must take strong action to cut off the Chinese Communist Party's access to technology that it uses to build a network of surveillance and repression around the world. Meanwhile, Senator Marco Rubio told us that China has been trying to sidestep the existing U.S. export controls. He said over the past several months, China's malign behavior has been on display for the world to see, and that includes tech-enabled surveillance and censorship. Now, Melissa, we did reach out to Huawei for comment. It declined at this time while it reviews the full details of these new regulations. Back over to you.
All right, Elon, thank you. Elon Moy in Washington for us. And of course, we saw the reaction across the board in the semiconductor space, in particular the chip equipment makers. Most chip makers out there globally use chip equipment made in the United States. We saw names like KLA-Tencor, Lam Research, as well as Applied Materials really fall hard on this. Guy Adami, you were quick to say when we first got the headlines that tensions with China would flare up. They're flaring.
They're flaring, yet the NASDAQ, are you a fan of Hank Stram, by the way? You know who Hank Stram is?
You know I don't know who Hank Stram is, so why don't you just go on?
So Hank Stram was the head coach of the Chiefs, and when he was mic'd, he famously said, let's continue to matriculate the ball down the field. Well, the market, the NASDAQ, continues to matriculate its way to all-time highs, regardless of the news flow. It's remarkable. But we have flagged that, and I'm shocked that the market isn't taking this more seriously. You know, you mentioned some of these names. Actually, AMAT is a name we talked about last night, and we collectively said to take profits after earnings. That proved to be correct. But the fact that the broader market, specifically the NASDAQ, doesn't seem to care about this news is remarkable to me, Mel.
Why doesn't the market care about this news in your view, Jeff Mills?
I think it actually does a little bit if you look back a couple of weeks ago. So Trump really ramped up the China rhetoric on April 30th. And guess what? April 29th was the peak of the most recent rally. So I think under the surface, the market actually is paying attention a little bit. And if you look at polling, it's pretty clear that voters feel like China handled this in a way that wasn't appropriate. So I think there's some political will to pursue these sorts of things against China. So China tensions, issues with the virus, it doesn't take a genius to figure out that that's probably not going to be good for the market overall. Specifically as it relates to what's going on with semis, I think Taiwan Semiconductor probably right in the crosshairs. 10% of their revenue is sourced from Huawei directly. If you're looking at some of the companies within the U.S., some of those suppliers, I would look at KLA. I don't know the company intimately, but I think it's worth taking a look at. You know, it was down 5% today, but it was up 8% yesterday, still trading below 17 times forward earnings. And if you just look at the chart, and this is why I think it's interesting, it seems to have found support at an upward sloping 200-day moving average. But I agree with Guy. A lot of people have crowded into technology for its perceived level of safety. Valuations are up. The XLK sources 15% of its revenue from China. Companies like Apple, 20%, Microsoft, 10%. So I think it's an area of risk that's worth paying attention to.
Tim?
Well, we this week got to levels of relative, overbought, if we will, on both the NASDAQ and even on the semiconductors. So none of this should be a surprise. It comes at a time when maybe you could have cooled it off. There's a real challenge for this administration to be caught between, I think, a very politically popular view on China and one that probably globally also has support. And the reality that if we go toe-to-toe here with further engaging on this dynamic Huawei, which we have seen before, and it hasn't gone real well in terms of sentiment, but obviously then stepping up trade war rhetoric. Again, it's an administration that also recognizes how important the market is to its staying in power. So you have a case here where I do think you've got a real headline-grabbing moment where I think China will continue to be the dominant theme. And I give a lot of respect for throwing caution to the wind in terms of the market. Now, to the market, this may be that opportunity where the underperformance of value relative to growth has an opportunity. And you have kind of seen some of that in the last couple of days. Obviously, retail sales this morning, not a great number, but maybe better than expected. You saw retail outperform today. You've seen some of the miners and some of the, again, some of the more industrial-based stocks outperforming a bit. This may be this ebb and flow, which also we've seen over the last couple of years. But agree with the other guys. I don't think the market should have loved this news. And over the last couple of days, you've had headwinds, and the market's done a great job.
It almost feels, and I know Jeff pointed out the levels and the reaction to the initial flare-up again of trade tensions, but BK, it almost feels like the market is discounting the ability of China to enact retaliatory measures, because if this does ramp, as Tim said, tit for tat, and we resume that sort of, you do this to us, we'll do this back to you sort of cadence, that market period wasn't a fun one for us.
No, it wasn't. And, I do think the market is probably under-evaluating this, but potentially what the market is saying is this is just political bluster at this point in time, because what we saw in the last kind of trade skirmish is that we ultimately did come to a deal. But I think what the market's ignoring here is the fact that this is part of a broader trend towards onshoring. So bringing the supply chain back. So if you're a CEO of a company, it's no longer politically or logistically feasible to have a long supply chain that begins in Asia. You have to start bringing stuff back. And that means goods are going to cost a lot more as they come in. So companies like Walmart, who get a lot of their stuff from China, potentially, and this is a medium to longer term view, but potentially you could start to see price increases there as a result of this broad onshoring trend.
So is that the I word that we're starting to think of then, Brian Kelly? I word being inflation.
Inflation. Yeah. Inflation. So I actually think we're in a period of biflation where you have both rising prices on some things where the onshoring causes that, increase in prices, but at the same time, things that are oversupplied, airlines, cars, hotel rooms, all those prices should continue to fall. So you kind of have this dichotomy out there. It's very weird. It looks a little bit like the 1970s, but not exactly.
And that's on top of a global pandemic, Guy.
Independence, if you want it, causes inflation. I'm absolutely with BK. On top of that, you have food inflation that nobody seems to want to talk about because they think it's magically going to go away, which it won't. The Fed won't acknowledge it. We have inflation in all the wrong places. And there's a problem brewing. I'm with BK. Again, I think the market is underestimating how deleterious this rhetoric can be to the broader markets. And it's shocking to me on a day where we had every reason to go down in a meaningful way that the market ratcheted back the way it did. Of course, 24 hours is not a day make, Mel, as you know, but I'm really curious to see how this thing escalates over the next week or so.